Hi, this is Daniel, and you're watching Unrivaled Investing. This is a no hype financial channel focused on fundamentals of investing, and we are mission focused on finding exceptional companies and unrivaled investments. Today is a special edition. It's the day after the US election, and we are focused on what's going to happen to the stock market, particularly the US stock markets, if Joe Biden is elected, which is looking increasingly certain. So I'm normally focused on multi-baggers, the types of companies that can go up hundreds or even thousands of percent over time. So if you're interested in learning about those types of situations, make sure you subscribe. But this video is going to be focused, with the Biden presidency increasingly certain, what's uncertain for most people is how is this going to play out in the stock market? What should you do as an investor with a Biden presidency? We've had it easy over the last few years with a very pro-business president, in terms of the stock market. In 2017, the stock market didn't even have a 5% decline because of the pro-business attitudes of President Trump. So the question is, what do the next 4 years potentially look like under a President Biden? So one of the possibilities, and what's one of the things that could happen under President Biden, is it should be easier on China. Less pressure on China, less tariffs, less tit for tat, less, hey, we're going to shut down TikTok and maybe we're going to shut down these apps and we don't like this and you have to buy our soybeans. Less of that and more just like, hey, you do your thing and don't cause too much trouble. Not surprisingly, China's ETF MCHI was up over 4% the day after the election, and China's currency has been on fire over the last 6 months, been one of the best performers in terms of currencies over the last 6 months. What else could happen? We should expect higher taxes. That's something that, Joe Biden, he put out in his tax plan saying, the corporate income tax rate could go from 21 to 28%. That's sort of meeting in the middle from what we saw under President Trump, where he slashed it from 35% to 21%. But either way, you're looking at a tax hike for many U.S. companies, all the companies that are based here. So what's that mean for the stock market? And, let's just do a basic example. Like, what's that mean for basic earnings? If you have $100 in pre-tax, so before tax earnings, $100 at a 21% tax rate means you have $79 to spend after tax. And spending, that earnings, that's how we value businesses over time. There's many different ways to look at it. At the end of the day, a company is worth the cash it's expected to generate over time, and earnings are one measurement of that cash. And so raising the tax rate from 21 to 28% would mean that earnings would go from $79 to $72. And that's the equivalent of a 9% drop in earnings. And at the end of the day, look, folks, stock prices are driven really by only three variables. You got dividends, you got valuation, and you got fundamentals, which is like earnings growth or sales growth. And so if you see effectively a 9% drop in earnings, all else being equal, the market should drop 9%. Based on that. That said, you do get other elements of play. You do get valuation where maybe prices stay the same and things just become, about 10% more expensive. What else is sort of happening? Well, wait a second. The big blue wave didn't happen. This was a big shock for a lot of folks where, they were expecting, hey, Joe Biden would easily become president. He would sweep all these states and, they'd get this massive congressional takeover, House and Senate, and then, man, the amount of stimulus the Democrats could pass, you would have, this Green New Deal, trillions of dollars, but neither party got a mandate. It was a super tight election throughout the country. It wasn't like 70-30. This was 49-51 throughout the country, where every ballot, every vote counted in several states. Not necessarily the East Coast, but several states were just critical in terms of driving this election. This is a really divided country. And as Barry Diller, I think he put it really well, the hordes of liberal policies and taxation and all this stuff, forget it. That's gone for now, probably for at least the next 4 years. And he's probably right. Like, neither party got a mandate on it. It's going to be really tough to, effectively push for one direction or another, because both parties are just going to dig in their heels potentially, in which case, you can have a dramatic overhaul. In which case, if you're not regulating companies, like, hey, if you can't rally the troops and be like, yeah, we're going to put the kibosh on these companies and we're going to show them what they need to do. Facebook, you're a bad player. We're going to show you what to do. You can't do that if neither party got a mandate. And that's why you have Facebook, Amazon, Google. They all, big tech had these huge rallies the day after the election. Facebook up 8%, Google over 6, Amazon over 6. This is a huge amount when you're looking at companies that are worth $1 trillion, hundreds of billions of dollars. The dollar value of this effectively saying, hey, yeah, we think gridlock in Washington will actually increase the value of these companies because we're not going to break them up. That's pretty interesting. Like, we're not going to make it harder for Amazon to do their job, therefore it's worth more. But also, importantly, like, well, that's fine and well for businesses. Like, the reality is Congress needs to work together. Like, the US is currently in this huge hole, in terms of stimulus, in terms of the economy, just in tatters. And you have a Republican Senate, a Democrat president. It's really uncertain you're going to get the fiscal policy that's needed to sort of drive the country where it needs to go in the years ahead. Like, people do need those stimulus checks. Businesses need money. States, cities, they need financing because they are just seeing red as far as the eyes can see. In which case, what happens if Congress needs to work together? Like, here's the scenario Bank of America laid out, which is that, if Trump had won and the Republicans had kept the Senate, then you would have had nice expansion, a lot of money flowing out. If Biden had gotten that blue wave, it would have been just crazy. Like, everything would have lifted off because the amount of stimulus, the mandate that they would have gotten. But now there's no mandate. You have Biden and a Republican Senate. Like, there's a good chance you have deflation because they're just not going to be able to get their forces together to push things, to push out the bills that are needed, the fiscal stimulus, the state stimulus, the city stimulus, like whatever is needed to make it happen. And if you get this gridlock where you can't make things happen, what happens next? Bum, ba, ba, you have Superman Jerome Powell showing up, the head of Federal Reserve, and stonks go boom. Like, that's what's been going on over the last few months since the pandemic has just completely cratered the U.S. economy. U.S. stocks are back near all-time high, which is just incredible because the amount of juice that the Federal Reserve is pumping in. It's just like, hey, let's just buy bonds. We'll buy corporate bonds, companies that don't even need their bonds bought. They don't need the money. Let's just buy it, push down interest rates. Like, maybe if we just push down interest rates enough, like, it'll heal the economy. Like, if you're a small business, pushing down interest rates enough, that's not going to do it. You're toast. And so you need that fiscal stimulus, but the money, all this dollar creation that the Federal Reserve is doing, it sloshes somewhere and it's pushing up stocks higher. It's pushing them to all-time highs. And so that's the game that everyone's playing. As long as the Federal Reserve is able to keep that money printer going, trillions of dollars of quantitative easing, stonks go boom. But is that enough? Some people don't think so. You have Jeff Gundlach. He manages DoubleLine, which oversees tens of billions of dollars. I think he's one of the smartest investors out there, and he's making the comment with deficits, and record valuations. He thinks the U.S. dollar is going to go down in the years ahead, which honestly makes a lot of sense to me. And he also calls out he thinks the U.S. will be the worst performing stock market over the next 5 years. That's a big slap in the face, especially when so many investors have gotten used to USA number one, like, hey, it's always going to be doing great. It's going to be performing really well. I would be cautious on that attitude. You should always, take a fresh approach, think open-minded about what's going to happen. And I think that's the reason why I like Jeff Gundlach so much, is he thinks clearly. He's not just going to say, hey, what's happened recently? He's thinking, what does the future look like? And for example, the US dollar comment about that going down, like, let's just think, if you're any international investor, you've seen China's yuan has gone up over the last 6 months. It's been one of the strongest currency. You see that they've handled COVID way better than the United States because they have an authoritarian government that's like, yeah, we're going to lock you in the building if you potentially have COVID. Whereas in the United States, it's like, hey, man, you can't take away my freedoms, man. I'm going to cough on you, man. Like, it's been a disaster here. I mean, look, honestly, President Trump has done an awful job managing COVID, but there's also, there's a broader problem as well, which is like people not believing in science. Whereas in China, it's like, yes, we're going to force this on you. And sure enough, now people in China, social meetups are fine. Which blows me away. But they've got it controlled. They've beaten it. I mean, that's one of the examples is Bridgewater talking about their Chinese office meeting in person without masks because it's fine. They don't need to be doing that. Whereas here in the U.S., we still haven't gotten it together. So Gunlatch's point about U.S. assets broadly taking a hit on the chin. Let's look at China where they've handled it well. Yeah, they're in more of a normal situation right now, and they have a more of a normal, asset curve or asset environment where their 10 years at 3%, their 10-year bond, the Chinese government is at 3%, and their currency is appreciating. Contrast that with the U.S. dollar, where if you're an international player, do you really want to keep it in a currency that's depreciating and paying less, or do you want to put it in a currency that handled this crisis better, a country that handled this crisis better, is paying more, paying 3x what you could get in the US, and is appreciating, is increasing in value? And so when you see these dynamics at play, and they're handling their deficits much better than the US is, you see these dynamics and you're like, yeah, I can understand why the US dollar would decline. And the secondary effects of a declining US dollar would be, hey, if you're transferring out a US dollar, you're taking it also out of US assets like the US stock market. So that could take, it's a double whammy. But what's the reality? Like, you have so many different perspectives. Like Jeff Gunlatch, he thought that Trump was going to win, and now it's more likely that Biden. So nobody's perfect. That's one of his calls. But what's actually going to happen? Here's what Nate Silver predicted. He runs a website called 538, which does, in my opinion, the best forecasting that you get with presidential forecasts. And this was the night before, the election, saying that was 10% odds that Trump wins. And that effectively it would be very obvious and quite possibly a landslide for Biden. That did not happen. It not even close. Yes, Biden won, but it was super tight race, down to the thousandth, how many thousand voters are in Nevada, voting blue. And so the presidential race was a lot tighter than was predicted. So if something like a binary event like this is super hard to predict, how are you supposed to predict something that has all these dynamics, Chinese government, Chinese bonds, US government, US bonds, interest rates, what's the Federal Reserve going to do? What are investors going to do? What's the mania? What's the attitude? What's valuations? Dynamic systems are so much harder to predict than a binary event. And here it is, Nate Silver got it almost right, I would say. So how are you supposed to invest when you're looking at a series of dynamic, setups that are super hard to predict? They're secondary, important secondary effects, and you can't predict it. That's the answer. You can't predict. You can make a best guess. And so instead, focus on what you can control. You will inevitably have a bumpy road. You will have highs, you will have lows. You'll go back down to lows, you'll have highs. And that's the way life works. But what you can control is how you react to it. You can control, how do I want to respond when there is a low? And the reality is, this will be a hit for 50% of the country that voted for Trump. And that's pretty much it. It's nearly 50-50, 50 for approximately 50% for Joe Biden, 50% for Trump. So 50% of the country is going to be disappointed. How are you going to react to this? You could argue that over 50% of the country is going to be disappointed because 50% of the country was probably expecting a blue wave, where you're effectively saying hey, this is going to be great. The Democrats are just going to have this massive stimulus. Now no one's getting what they wanted. But you can control how you react to this. If stocks are expensive, you don't have to buy. If stocks are cheap, you can plow ahead. In the middle of March, earlier this year, when COVID was, really making people nervous and stock prices were falling, you could have bought some things that turned into multi-baggers within just a few months. So you can focus on what you can control. Don't focus on what you can't control, which is where the stock market's going day to day. Focus on one company at a time, trying to find that next potential multi-bagger. And that's what I'm trying to do. When you go to unrivaledinvesting.com, you see what are the multi-baggers that I'm trying to find, what are the multi-baggers that I'm trying to identify. That's my personal journey. My personal journey is trying to find these companies that can go up hundreds or even thousands of percent over time. And the reality is, all it takes is finding one potential multi-bagger to change your life journey. So if you're interested in following my journey to find those types of companies, go to unrivaledinvesting.com, click on journey. You can also see, not only what I hold, what I buy, what I sell, I also have exclusive content. And if you liked this video, if it was thought-provoking or made you think, make sure you subscribe and hit that like button. Helps the Google algorithm. Really appreciate you watching. Thanks.